Welcome to the Women's Connection. I'm Barrie-Louise, your moderator. The Women's Connection is a program about events shaping women's lives and helping one gain authentic power on a personal or professional level. So won't you stay tuned? Welcome to this segment of the Women's Connection. We're going to talk about finances. And my guest is a global money manager, and I would like to welcome Carole Lynn Steiner. Carole, thank you so much for joining me today.
Thank you.
Why don't we just start and talk about your background and give the audience a general idea of who you are?
Oh, surely. Well, briefly, after graduating from New York University, I received my early management training within a large metropolitan area medical foundation. Concomitantly, I started my own business, which in time led to my managing funds for global clients.
How interesting. All right, well, let's start. How does one select stocks, or what's the first thing somebody does?
Or that I look for?
Right.
You know, when I am looking for companies in which to invest, first I look for a strong market position.
Meaning?
I like a leader within the industry. I know that we'll get to some of these as we go along, but in general, in my criteria, the first thing is strong market position, leadership. Somebody, if you say Microsoft or GE or Walmart, oh yeah, people. But
name recognition.
Name recognition and substance behind the name. So that's number one. Number two, I look in a 3 to 5 year period, a per annum increase in excess of 20% in profit and revenue. And this is what I look for in order to see that substance behind the name. And number three, I look for a strong balance sheet that's cash and little or no debt. You want cash because it allows companies to meet competition and go into new markets. And the combination of cash and little or no debt also means that they have little interest rate risk. So we are in much better condition. Therefore, I think you could see that I favor large cap companies, and so far they have proven successful, and they've been handed down to me from grandparents to parents.
Oh, that's fabulous.
Yeah.
How would you structure a portfolio? What are the different types? You're talking a balanced, or you talk, I'm not sure of the different types. What?
It's a good question. It's a perfect question, because one must have a balanced portfolio, and you need diversification. You should buy stocks of different industries, and then buy companies that are the cream of those industries. You must have diversification. Industries take turns rising. Everything, no matter how wonderful the market, no matter how fine your stocks, everything does not go up together. A good portfolio has balance. And once you have the balance and you select the group, I then allocate funds and diversify over 4 to 6 sectors of the market. The amount that we can diversify is based upon the strength of the client and the amount of the assets allocated.
Okay, so wait a minute. Let's go back a second. Okay, you're saying a well-balanced, and you're saying to go into different sectors.
Yes.
Okay, can you give me an example of what a sector is that you're talking about?
Absolutely. Let me give you an idea of if we had maximum as opposed to minimum funds, what I would look at as balancing. Without describing each one, although I could go back and do that, we would have from the certain high-tech sector, Cisco, Microsoft, Intel, Dell, and IBM. In the banking group, Chase Manhattan and MBNA. In the pharmaceutical group, Merck and Pfizer. in what I call new technology. Some of it is e-commerce and some a variety of e-commerce, AOL, At Home, VeriSign, and Priceline.com. In DSL technology, which is absolutely crucial to current movement,
Okay,
North Point and Covad, followed by GE and Walmart.
okay, what is DSL? That's a term I've never heard.
We could start with, everybody knows Microsoft, Dell, Intel. Some people would not know Cisco. But these companies are the creme de la creme of hardware, software, and telecommunications, and of course our IBM. DSL technology, leading with North Point and Covad, DSL allows broadband over existing copper wire. They don't have to go out and lay anything new. Everything is there, and we can now provide this broadband width to smaller businesses or businesses that don't have the resources to adapt cable. And it's current, and it happens now.
So it's technology that's happening as we speak.
Absolutely.
It's something that you couldn't find 10 years ago.
Mm-hmm.
It was unknown then.
That's right.
What, okay, so that would be more of a balanced fund that you're talking about, a balanced portfolio.
Mm-hmm.
What other kinds of portfolios are there?
Well, I always say people should set an investment goal.
All right.
And then when they're talking what kind of portfolio, people buy for income and or growth. For income, you look for dividends. And common companies that have dividends are the oils, utilities, and the banks. Generally, an income stock is not what we would call a growth stock, although some of the banks that I favor do combine both. But if you're buying for income, you need dividends. If you're buying for growth, which is more typical for the reason for purchasing good equities, you are looking for stocks that split. In buying for growth, you could try to buy at the lower end of a trading range, such as after a stock split or when the market has taken a dip. But the beauty, the logic of being a long-term investor is that once you have a few stock splits behind you, no fall off in the market can ever take your growth away.
That sounds good. All you got to do is remember to buy at the dips and buy.
You can't.
You can't.
You can't. You
Okay.
can't. That is one reason I think you're probably leading into, well, you know, how do you invest money? You know, do you just throw it in at one lump? Or some people...
It's like a crapshoot. Okay.
For some people, in a way, it is. It develops. I have some clients who were former day traders, and it's pulling teeth to get them away from that action every day and leaving it alone and letting good things grow and work for you. But some people feel that putting money in every month, a specific amount every month, is best. This method of dollar cost averaging will give you about the best average annual price. You will buy at highs, at lows, and at the end of every 12 months you will have close to the best average annual price. But other people put in a bulk amount, figuring it's for the long haul, get that money in, and then at propitious moments put in a little bit more if it is available, such as after a dip or a stock split.
Is there one method better than the other method in investing?
Oh, no, no. It depends. In how much you invest is highly individual, and when you invest, your investment policy is individual. You must decide, this is how much I have in the world. What portion of it do I want to commit to investing, and do I want to do it more in a bulk or on a monthly basis where I feel more secure in getting prices.
Now, on a monthly basis, you're talking about dollar cost averaging. So if you do your dividend reinvesting in that situation,
Yes.
that helps it also.
Oh, dividend, it's a good point. Dividend reinvesting, where every company does not offer that. But where it is offered and there are dividends that come in, you may as well sign up, or if you have an investment advisor, you let them sign you up so that the dividends are immediately reinvested by the company. And it builds. It builds. All of a sudden, you get your statement every month, and oh boy, I've got another share, or I've got another 5 shares, or it depends how much money you have in the original stock. That determines your dividend, and that determines how much you're going to have.
I remember I bought my first stock, which was 1 share of AT&T, and I got my dividend. This goes back a number of years. And my father said to me, it cost them more to cut you your check than that whole check is worth.
And now
I said, I don't care. It's my check. It's my first stock, 1 share I purchased.
Oh, absolutely. Oh, it's thrilling. People buy stock for their grandchildren and their children. I have clients that give gifts the year round instead of for birthdays, anniversaries, Christmas, Hanukkah, anything. They give the children stock all
It's a
year
wonderful
round.
time.
And they start when they're babies.
Now, who do you get your reliable information from?
The best information is from listening to the companies. You listen to what management says, you look at what they do, and you listen to what they disclose. Management is liable for their statements, whereas the commentators that you hear in the media, see in the print media, they can always say, oh, so I'm sorry, I called the market wrong. That's if they're pressured
nice.
to say I'm sorry. It just goes past like predicting a rainy day when the sun shines. Whereas management of companies, what they say, what the goals are, that directs the successful performance of the company. And when you find a company that is reliable, consistent, and has integrity, you can pretty well follow that management for years and years. And as a matter of fact, I look for that. I would tell you to look for that in a broker too. You want consistency, reliability, and integrity. And also, when you're asking me about that, too many of the commentators that you may hear on radio, television, or in the print media are not technically knowledgeable enough about the companies that they discuss, or about the market, or about the industries. I would like to know from many of them, what qualifications do you have to make all of these comments and predictions that so shake the market or move the market? What is your background, and what stocks do you own? And I also feel that if a firm knocks a stock down, they should be prohibited from pushing that stock for 6 months.
That sounds a little shaky there. A little, you wonder if somebody's knocking it today, why are they buying it tomorrow?
Turning around the next day.
Exactly.
Yes, it could be 5 or 6 weeks later, sometimes less. But that's why you must assess the information that you're getting. Where is it from? Assess the source of the information. Does somebody have another interest in saying what they're saying? Company management has to be real.
I was going to say, how do you find out what somebody's objective is? I mean, an analyst will say, don't buy or buy.
Mm-hmm.
How do you find out or ferret out what the real motive is? Is it to say, okay, I'm pushing the stock because it's a good buy, because I have a short or a long position in it?
Mm-hmm.
How do you ferret it out?
You do listen and see, is this person with a particular firm?
Mm-hmm.
Does the firm sell securities, or is it only an underwriting firm? Do they have this IPO coming out soon, an initial public offering? Again, there are several things you can read to have better information for yourself. Your newspapers, that alone, you start, and that alone is going to get you to a point that you're more secure in what you're listening to. The Wall Street Journal, the Financial Times, and the New York Times, read every morning, and you get into the habit and the swing, the routine,
the rhythm.
Yes, the rhythm, and you suddenly are seeing day in and day out. You realize where the specific columns are, what you're looking for, which is international news, and then you get to your domestic news. You start with that, and that is where you see comments printed from the companies. GE's chairman, Jack Welch, says, John Chambers, chairman of Cisco, says, Bill Gates, chairman of Microsoft, says, and you read that. Then you can also get the investor package from a company.
All right, but let me just ask you something. You read all this stuff from the newspapers and other periodicals, which we'll get to in a moment. My question is, how do you know that they're not building up their company to say, okay, I am the greatest, which I'm sure all companies would, CEOs would say, I am the greatest.
Yes.
But how much of it do you even believe when they're saying, I am the greatest?
They don't, in general. When you do find the rare top executive that comes out with some statements, and when you shake your head and say, my goodness, I'm shocked to see that someone of that stature feels that he has to say that, and more, not that I'm the greatest, but when they go and start knocking a competitor rather than concentrate on saying, we do this product and we do it so well and this is where we're going. But when they then add and they start sniping at another company, that is when you should start saying, wait a minute, why are they so concentrated on taking pot shots at another great company?
Their competition.
It's competition, and you will tend to find that that other great company does not snipe back. They ignore it and they move on. And I've already lived through 5, 6, 7 years where I've seen one particular company not doing anywhere near as well as it had 5 or 6 years ago, while its competitor is doing fabulously, Microsoft. And Microsoft always takes the high road. They don't snipe, and many similar top companies. I'm sorry.
They're God.
No, actually, we also we look at companies also as customers, because sometime back when we were redoing hardware, software globally, and you come to know which companies, if they give you good service, if they are consumer-oriented and they care, they also tend to be the top companies that really produce for a stockholder.
Let me ask you, where do you see the market, let's say, in 10 years?
The future of equity investing is bright as it mirrors global economic growth. There should be much greater participation in stock markets as we see historical PE ratios go to ever higher levels in the next decade. And those high levels will now be considered normal. The demand for equities is increasing.
Let me ask you, what would you suggest makes the characteristics of a short-term stock?
Since I don't believe in short-term buying.
Wait a minute, let me ask you this. What is a short-term buying in your terminology?
It would be something that somebody, for some reason, intends to turn over in less than a year.
All right.
So in that case, there is if somebody was doing that through me, my policy is a long-term buy and hold strategy to to maximize profits and gains long term and help the client avoid the tax bite and the losses of sell and buy, and the losses can be turnover. The losses can be staggering. If you are in good things, you shouldn't switch in and out of them. And therefore, the short term, if somebody wanted to do that with me, there's a reason for it. And generally, somebody either has huge gains that we're going to take a shot and get some short-term losses against, or they have some other losses. Mm-hmm. And we know, like, right at some point, the market is really low, and if we buy a few good things, we might have some gains, and we'll sell it quickly so that we have some gains against the losses. But this is strategy, and I would use that in select cases.
Okay. How much should people invest?
Investing is highly individual, as we touched on. You have to, again, you look at your worth and you determine how much of that you want to commit. And once you do, you go through, follow through on a regular basis or on a bulk basis. But it is a highly individual situation. Like choosing your broker, it's individual.
Carole Lynn, obviously you're very comfortable with investing, and you've been doing it for a good number of years. How did you achieve such a comfort level?
That's a good question. Well, I was brought up with it.
Brought up in what way?
First of all, my common dinner conversation, I was brought up seeing what my parents, my grandparents did with their investments. Common dinner conversation would involve what was doing in the market, what they had bought that day, what dividends came in, what stocks had split, what they bought for the baby, and that was me. But I did learn that there are just enough ways to safely make money without going out of my way to lose it. And I mean, the rest of my getting into this business is a longer story. I don't know if you would like to hear.
Of course, I'd love to hear your story, because I think I think the audience would appreciate it.
Well, as I was developing what had been a different business, I had taken to dinner a German president of a company and an Italian corporate president. And over the course of dinner, we're chatting about the stock market. By the end of dinner, the German, yes?
Let me just ask you a question. Were they surprised that you were so well versed in the market?
Nobody ever asked me that. No, they didn't seem to be, but at the time, but I guess they were, or they were surprised at their comfort level in what we were discussing, because nobody ever asked me that. But at the end of dinner, the German said, "Before I leave, I'll set up an account and you trade for me." I said, "Oh, Richard, you've had too much wine." And then Carla said, "Oh, me too, absolutely, I agree." I said, "Ah." So I ignored them. And the next morning, a messenger came to my office with checks from each of them for $85,000 apiece, made out to me, powers of attorney. And at the bottom of Richard's power of attorney, he wrote, "Don't worry, Carole, you couldn't lose more for us than our," and he named a particular large company, "brokers already have." So So I immediately took the money to our E.F. Hutton office in Great Neck, near where I lived, and I opened joint accounts for myself, Carole Lynn Steiner, and this gentleman, Carole Lynn Steiner and that gentleman, with their separate U.S. tax ID numbers. And I split the money into about 5 stocks. They both had identical purchases.
Right.
And within 2 months, they were doing so well that they opened accounts for me, with me, for grandchildren and children. Their partners opened accounts, and I had 29 private investment accounts.
And you weren't really a broker at this point?
No, I was now known as a private investment advisor. And they told me, take your fees, take whatever, because we were not investing to trade. This was to leave. And it was months that went by that I suddenly thought, and I asked them, how did you actually determine that amount of money? I mean, I could have seen in 1980, $85,000 each was significant.
Yeah, it certainly is, and it's an odd number. It's strange.
Yeah, that was exactly my thought, and I had never asked, and they never mentioned, and I had been very worried about losing it. I didn't invest people's money, and so they said, oh, didn't we ever tell you? I said, no, you didn't. And he said, well, we took our average daily losses at the crap table in Vegas the week before. We figured if we could lose it every day, we could give it to you. I said, my God, if you would
It's a real crapshoot. You could have breathed a little easier.
Wouldn't have been in such a panic, So at any rate, the head of the Great Neck E. F. Hutton office he came over to introduce himself one day, and said, I've been watching what you're doing. He said, as the head of the office, I'm aware of the trades, and it's fabulous. Who are you? Where did you come from? Masked lady. So we got to know each other, and in time he took me in to introduce me to the chairman of the board, Robert Folman, and they wanted me to join the company, and I said, why?
You were probably outperforming all their other brokers there, and that
I don't know about that. But evidently it was doing nicely enough that they, and I said, well, why join the company? Oh, well, the prestige of being an E.F. Hutton broker. And I said, well, but if I join you, don't you get a part of all my money?
Right.
So this went on for close to a year, and my concern was also if I joined, I had my other business that I was still building. And finally they said, look, it was the end of September, the beginning of October, and they said, join us. Any accounts you have, they're your accounts. We won't ask you to sign anything. And we came to all the financial arrangements. And so we shook, and I took their course, which was a course. It isn't like what the brokers get today.
Well, Carole, I'll tell you, this is an incredible story of a person becoming a broker. That is really fascinating, and I want to thank you so much for all this important investment advice. It has been wonderful listening to you, and we'll have you back to do some more segments because this is wonderful.
Thank you.
And I thank you so much for joining us tonight. And thank you. Thank you for joining us, and happy investing. See you soon. It's really very informative, very nice.
Oh, good. Oh, good. I have no...